bloombergquint.com. Write to us now. Use the word Ramdev in all your queries.
Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. The Nifty hovers near record highs. Banking stocks lead the rally. Punjab National Bank gains more than 5% after the public sector lenders' asset quality improves in the second quarter. Vedanta reports a 47% jump in second quarter profits. Says it expected an even better second half as metals rally. Jerome Powell is Donald Trump's choice for the next Federal Reserve chair. Interesting conversations lined up on the show today. A drop in angel funding is hampering the growth of startups, says NASSCOM President R. Chandrasekhar. We discuss the great unwinding by central banks with Vishnu Varadhan of Mizuho Bank, and institutional investors are flexing their muscle. We talk to Hetal Dalal of IIAS. But first, a quick check on the markets. The markets are in fine fettle. This afternoon, banks are leading the pack as always. In the last couple of weeks, that's been the trend. Pradeep is telling us how we are hovering near record highs.
So benchmark, Sensex and Nifty, they look as good as they were yesterday. Not much movement there, not new highs not coming in very easily. But if you look at the broader market, it's a bit stronger than it was yesterday, and that's heartening because today being the Friday, usually we see a lot of profit booking in these active mid-cap and small-cap shares, which is not that prominent, at least as of now. Let's see what happens in the second half. The other positive, as you just mentioned, PNB numbers have been good. So private banks were already supporting index since morning. Axis, Yes Bank, even heavyweights like HDFC, there was enough buying there. Now, if PSUs also start to move up, that would be positive. If Nifty Bank really gains, holds on to 25,500 level and builds on that, that would be probably an added advantage for bulls really. And also, you have some significant buying interest in a number of stocks like PSUs. They moved up. Now, today, probably, two stocks I would like to pick up. One is Steel Authority. And I've heard at least two convincing arguments, from analysts. A, that the entire sector has bottomed out and moved up. So look at Tata Steel or JSW. And this one is probably underperforming. So why not some movement there? And also significantly, after Dredging Corporation decision, there is also hope that other projects or other PSUs that were shortlisted for strategic divestment. In case of sale, government has already proposed that they want to strategically sell out some of the inefficient plants. 3 plants have already been shortlisted. So there could be some action. So there is a reason why there is buying into it. So that's again convincing. The other PSU, again in metal sector, is Hind Copper, which was actually looking good even before the dredging announcement came. And they have again hiked the prices today once again. For several months, they have been hiking prices. So the trend remains positive here. If you look at some more pockets, media is interesting, where you have Hathway and all the other distributors moving in. And also Sun TV looks interesting here, which is also mentioned by some of the F&O dealers today. So there is some build-up happening there. Biocon looks interesting in pharmaceuticals. And after results, we have seen Ujjivan doing well after a long time. So to sum it up, there are several interesting pockets and stories which are actually emerging.
Interesting that the move on Ujjivan nearly 9% up in trade today. Biocon has also moved on the back of numbers. Pradeep, thank you so much for that. All right, we're at record highs. What's taken this or what sustained this party is liquidity. The FIs were buying earlier, now it's domestic mutual funds. But central banks from Europe and the United States will soon be turning the tap off next year. Interest rates are on the way up and central banks are preparing to unwind their balance sheet. What does this mean for global markets, especially emerging markets that have benefited from the flood of fund flows? Chris Anstey of Bloomberg News has done this analysis. He joins us from our studios in Tokyo. Chris, thank you so much indeed for joining us. As I was mentioning, central banks will soon be turning off the easy money tap early next year. What are the challenges during this transition period?
Well, Harsha, we're really at an inflection point here for the developed nation central banks. You think back to 2007 when they started this massive rollout of liquidity. It was in August of 2007. I actually was a U.S. economy editor in Washington when the ECB kicked things off and injected unlimited liquidity into markets. I actually woke up the New York Fed spokesman that morning to ask him, what's the Fed going to do? And of course, in the ensuing decade, we saw the Fed, the ECB, Bank of Japan, Bank of England as well, inject massive liquidity, more than $14 trillion balance sheet cumulative as of now, if you look at the Fed, the ECB, and Bank of Japan. And next year, if you look at the Fed is already shrinking its balance sheet, the ECB is essentially phasing out its QE probably by September of next year. The Bank of Japan has been stealthily tapering its asset purchases. This is going to have a significant challenge for markets. If you think about looking at how much linkage there has been between, for example, Fed liquidity and the U.S. stock market gains. If you actually run the numbers from 2008 to 2015, more than half of the gains in the S&P 500 index came on the days that the Fed announced its policy decisions. That's how tight the linkage is. And as you point out, for emerging markets, what this has meant is massive compression of bond yields globally, which has allowed enormous investments that couldn't have otherwise been made in emerging markets because borrowing costs have come down so much. So what's going to happen to markets? Well, they face a big test when that liquidity withdrawal comes. What people are saying is that a key ingredient is going to be, how does inflation look? If inflation is still tame, that's going to help hold down bond yields and prevent what would otherwise be perhaps a destabilizing jump.
Chris, if I can just ask you one follow-up question. History has told us that any transition period of this nature is fraught with risk. What are investors saying is about the potential risks of this transition period?
Well, if you look at, most investors are saying that we've still got a few more months to run yet before this contraction begins. So now is a good time in the minds of some to start taking a little bit out of the markets. You look at, for example, AMP from Australia. They're boosting their cash allocations so that they're ready when they see a decline in bond and stock prices globally. As long as the fundamentals stay pretty solid, there should be opportunities once prices start retreating a little bit to go back in. But there's some time yet to reposition for what's likely to be the biggest challenge to global markets in some years.
Good talking to you, Chris Ansey. Thank you so much for joining us. Chris Ansey joining us from our studios in Tokyo, talking about the easy money policy that's going to be, the tap is going to be turned off early next year. Let's wait to see how central banks react and what does that mean for global financial markets. Back home, talk about earnings. PNB, Punjab National Bank's September quarter earnings were better than expectations. Company's asset quality has improved substantially. Shraddha is here to give us the key takeaways. That stock has moved up about nearly 2% in trade today. Shraddha.
Well, yes, like you mentioned, the numbers are better than estimates, but the one key factor which has aided that net profit growth in this quarter versus an expectation of a degrowth is the lower employee cost that has come in this quarter. But if we run through the key numbers, net interest income has grown by 3.5%, net profit is up 2% at 560 crores, whereas the street was working with numbers of around 390 crores. If you look at the operating profit, again, that's done well. It's up 20%. Gross NPAs are flattish on a sequential basis in absolute terms, and there is some improvement, marginal improvement as far as the percentage numbers are concerned. So gross NPA has come in at 13.3% versus the number of 13.66% in the June ended quarter. Provisions are also more or less steady on a sequential basis. Advances growth has come in at 4.2%. That's the kind of range that we were working with. So again, in line. Small positive is also the provision coverage ratio, which has increased marginally from the previous quarter. We will be waiting for the slippages number and management commentary on the same, but broadly it's the asset quality improvement that the street seems to be focusing on right now.
Shraddha, thank you for that. That's Punjab National Bank for you. That stock has reacted positively, nearly 2% in the green. Vedanta, meanwhile, posted a 47%. That's PNB. Vedanta posted a 47% jump in profit in the second quarter, in line with what the street was expecting. What's more is that the company expects an even better second half. Swansea Afonso of Bloomberg News is here to tell us why. You've been talking about the fact that Vedanta has been bullish. What does the metal rally have to do with this optimism that we've seen from the management of the company?
Yeah, I mean, Vedanta's basket of commodities that it produces, like you look at aluminium, you look at zinc, copper, they've all been rallying like more than 25% this year. And this has been led by the capacity cuts in China, improved global economies, and, demand has been better. So Vedanta is basically expecting this momentum to continue, and that's why it expects more robust second half, actually.
Are they looking at expansion, greater investments?
So they have been expanding their capacities, be it in aluminium or zinc. So they kind of ramping up capacities, and this with the growing prices has led to Vedanta being the top pick among Indian metal producers as such.
All right, that's the overall numbers of Vedanta on your screen for you. That stock is up, profits have jumped about 47%. That stock is up in trade today. So Swansea, thank you for that. We also caught up with Kuldeep Kaura, CEO at Vedanta, earlier today. He said easing supply constraints in coal will help Vedanta post even better numbers in the fourth quarter. Listen in.
Current quarter, we had a production of about 400,000 ton, and we plan to exit this year at a production level of around 500,000 tons of aluminium. And as you've seen in our guidance, we said that the supply constraints in the coal, we should ease up. We expect higher production of coal from Coal India, and we also expect that the logistics will improve. Our materialization percentage of linkage coal, which is the cheapest source of coal for us, will also improve. So this can take a time, but towards the quarter four, certainly numbers should start looking much better.
All right, that's Vedanta for you. But more talk about metals. Global aluminium giant Novelis posted strong set of numbers in the September quarter. Company's also upgraded its EBITDA guidance by 4.5%. Nikki is standing by with all those numbers. Good showing, Nikki.
Very good show by Novelis. The margins have come in at a 5-year high. Also, the EBITDA guidance has been revised, as you rightly pointed out. It has been revised by $50 million or 4.5% than what the guidance has been earlier. But then it did mention that the cost inflation has partially offset the gains that have been seen on account of LME. Just to give you a quick rundown of what we expect in terms of Hindalco earnings, we expect the net sales to grow by 19% at 10,722 crore. We expect the EBITDA to grow as much as 14% on year-on-year basis at a number of around 1,315 crore as compared to 1,156 crore in the corresponding quarter. Margins are seen flat, and PAT is expected to rise as much as 13% in this quarter. Well, we are expecting the LME prices have been higher both on sequential basis as well as on yearly basis, which is expected to help the top line growth of the company. But then the hedges that have been created on aluminium business on account of in the previous quarter due to lower LME prices are expected to weigh down on the margins of the company. Besides that, higher input costs, that is a trend which we've seen across the ferrous and the non-ferrous space now, that is also expected to weigh down on the margins of this company. In terms of geographical bifurcation, well, we expect 18 and a 15% growth coming in on the North American as well as the European business. However, we're expecting some kind of pressure to creep in from the South American business, and the EBITDA to decline there 8% on YOY basis. The factors that we'll keep an eye out will be the cost of production and the EBITDA of South American business for that matter.
Nikki, thank you for that. Media reports suggest that Torrent Pharma is all set to buy the domestic business of Unichem Labs. Darshan is here with some of the details on the story. Darshan, what are the benefits if this deal were to go through, and what kind of value are we talking about?
See, the valuation that has been put out and there have been lots of media reports that have come out, anywhere between 3,200 to 3,500 crores. So this means then this is only the domestic business that we are talking about. So that will happen at an EV to EBITDA level of anywhere between 10.7 to 11.3 times EV EBITDA, which is very good for Torrent because their EV EBITDA is currently at almost 14 times. So they're getting a good deal. Now, if you look at Unichem, 60% of the business is domestic. So that is close to 850 crores. On that, they are getting this valuation. So for 850 crores, they are getting sales of 850 crores. They are getting anywhere between 3,200 to 3,500 crores. So that's a good deal for Unichem also. The balance is 40% is the export business. Now, what are the benefits? First of all, the benefit is that there is not enough overlap currently. So the products that they will get will be complementary in nature. So that is good. Secondly, the combined entity, if Torrent buys out the domestic business of Unichem, it will move into the top 10 Indian pharma companies. So that is a positive. The field force productivity will improve significantly post this deal that will happen, given the fact that Torrent has actually proved it time and again that whenever they acquired, like they acquired Elder, the field force productivity increased significantly. Cross-selling opportunities are also significantly there, and some of the products that they had, Unichem had, including a drug called Losartan, in which it was under the NLEM, so they couldn't take price increases. Now it's out of it, and that is why Torrent has been showing revenue growth. Unichem has been showing muted growth, so Torrent will be able to take the price hike. And finally, the balance sheet for Torrent is strong enough to do such an acquisition. So pretty much it's a win-win situation for both of them. It is value accretive according to Credit Suisse. So if this deal happens, it's a big positive. But now it depends on what valuation. So if this is the valuation, 3,200 to 3,500, it's a good deal for Torrent.
Watch out for the story on Torrent and buying Unichem's arm. Darshan, thank you so much for that. That's Torrent Pharma's stock talk for you. Not much action in today. But many solar projects in India are facing delays and inflated costs. The reason? Tax dispute. According to a Bloomberg News report, customs officials have blocked more than 900 containers of panel shipments demanding higher import duties. Anindya Upadhyay, who reported on the story, joins us from Delhi. Anindya, what exactly is the cause for concern and what's the dispute here?
Solar projects to be built over the next 2 quarters in India could be delayed because of a dispute over tax semantics. Now, in a bizarre incident, 900 containers with solar panel shipments are stranded for a month off the coast of Chennai, off Chennai port, because customs officials think that solar panels cannot be categorized as solar panels. They think it should be categorized as motors, because solar panels generate DC current or direct current akin to motors. Now, this implies that if solar panels are motors, they should pay 7.5% import duty. The importer should pay 7.5% import duty from zero, which is applicable on solar panels. Project developers are taken by surprise at this tax quibble, because we all know that India's solar targets, solar industry, depends on imported solar panels, and this is not the first time that solar panels are being imported or coming to India. And from Chennai port itself, many project developers have been importing or have imported solar modules over this year and over last year, and to kind of seize 900 containers and say that they are not solar panels but something else is something which is causing delays in project construction. Also, it is inflating costs for project developers, some of whom just decided to pay up the 7.5% duty and free up their panels to meet project lines, while many others are still waiting for this dispute to get resolved and get their shipments. In the meanwhile, the customs is investigating this case, although a precedent exists. Last year, at JNPT port, a similar dispute had happened, where the customs had classified or investigated solar panels being motors because they direct DC current, and if they were and if 7.5% duty was applicable on them because of this. However, a directive was issued by the Commissioner of Customs last year, which is in the public domain, and which clearly says that solar panels are exempt from duty. The Ministry of New and Renewable Energy has over the last month written letters to the Finance Department and to the CBEC, or the Customs Department, saying that solar panels are not motors and they should be exempt from duty. However, the Customs Department at the Chennai airport, at the Chennai port, insists that they would want to look at the matter on a case-by-case basis, and they will take all the time that it would need to take to investigate this matter. Meanwhile, project developers wait for their shipments.
Anindya Upadhyay reporting from New Delhi. At a time when Reliance Communications is struggling to bring down its debt pile on its books, the Anil Ambani Group company is faced with a bond coupon deadline on Monday. Bloomberg's Dennis Wee joins us from our studios in Hong Kong. Dennis, can you explain to us what this challenge about bond payment is?
Well, the main challenge that Reliance Communications faces, this bond coupon payment is not terribly big, but at the same time, it's currently in a standstill agreement with its lenders. So it could be in a tricky spot in terms of paying offshore bondholders money, whereas it's still not paying its onshore lenders, which have secured any coupon or interest payments or principal repayments. I think that would be the key challenge, along with the fact that Reliance Communications is faced with a mountain of debt. It's got about 6.8 billion of debt right now and 70 billion of cash, and its efforts so far to pay debt haven't been very successful. So those would be the key challenges in my mind.
Denise, we'll leave it there. Thank you so much indeed for joining us. That's the story on Arcom for you to bring up that stock to tell you how Reliance Communications has been faring. That's the stock, 17 marginally about 1.5% lower in trade today. Indians love their sweets, and biscuit makers want to make the most of it by ramping up their cookie offerings. Almost all big makers in India, be it Britannia, ITC or Parle, have increased their packet size over the last few months as they try to get a larger bite of this business in the country. Charlene is here to tell us why suddenly cookies are in flavor. Charlene.
Okay, so after the GST was announced, the rate on the cookies, or basically the on cookies came down from 22 to 24% to 18%. Because of which manufacturers did not lower the prices. In fact, they went and increased the grammage on each pack. And Britannia, which is the leader in this category, basically with a little over 40% market share, also did the same. And basically, which has triggered a war. ITC has not stepped down. They are pushing for Mom's Magic. In fact, when we spoke to ITC, they said that they're also offering more to the consumers. They've offered fruit and nuts, they've offered sattu biscuits, and also bringing in more variants, and they're also looking to increase their distribution reach. Parle, on the other hand, when we contacted them, also said that they are going to play in the mid to premium space and also offer more variety to the consumer, and also they are also planning to take their mid and premium brands all over the country. Now, this has also happened because the sweet biscuit market, which is the mass market, is growing at a very slow pace at a CAGR of 5%, due to which cookie manufacturers are now pushing on this for a higher market share.
Charlene, thank you so much for that. Angel funding dropped by more than 50% last year. NASSCOM, which came out a report on the startup environment in India, says this has hampered the growth of startups in this country. Nishant caught up with the president of NASSCOM, R. Chandrasekhar, and started by asking him why angel investors are choosing to hold on to their purse strings.
There are multiple reasons for the decline funding in the seed stage startups. The most prominent one, of course, is the persisting issue of the angel tax, so-called angel tax, which actually taxes angel investment even before they have made any profit and at the point of investment, in effect. This, I think, is a big dampener, and also, curiously enough, distorts the playing field between a domestic investor and a foreign investor.
Right.
So imagine that a foreign investor does not face this tax, whereas a domestic investor faces it. So clearly, it's a huge disincentive for investors, domestic investors, to invest. And a lot of the angels are actually domestic investors. So that's one aspect of it. The second aspect of it also is, I think, that we do need to focus as a country on the ease of starting a business. Today, worldwide, countries are ensuring that a business can start in 24 hours or less.
Right.
And many of them are not only enabling instant registration and instant start, but also remotely.
Right.
So you can actually start a business in those countries sitting here in India faster than you can in India.
That's the president of NASSCOM, Chandrasekhar. Slip on a short break. On the other side, we're going to be talking about balance sheet unwinding by central banks with Vishnu Vardhan of Mizuho Bank and what it means for currencies and financial markets. That's coming up on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Watch us live in conversation with Ramdev Agrawal as we talk about the power of price.
Market is very, very competitive, and now there is a FI market, there is a DI market, and the bucket is same. What is the right price? I mean, at what price you should buy, and how do you tackle this overvaluation, the problem of overvaluation right now? Should you avoid buying?
Watch us live in conversation with Ramdev Agrawal on the 7th of November at 11 a.m. as we talk about the power of price in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
You're watching Power Lunch on Bloomberg Quint, the headlines at this hour. The Nifty hovers around the near record high, small cap index outperforms. Jerome Powell to replace Janet Yellen as the chair of the US Federal Reserve. iPhone 10 hits the stores, Apple lovers queue up to get their hands on it. Bitcoin shoots past $7,000 for the first time. The cryptocurrency has gained more than 640% so far this year. All right, we're looking good at the markets at this point. The benchmark indices are hovering near record. It's been a broader rally as well. That's the Nifty for you, up about 0.25%. The Sensex trading about 0.25% higher as well. Navneet is here to take a closer look at some of the stocks that have been buzzing today. Navneet.
Well, Harsha, after a bit of consolidation that one has seen at those elevated levels on both Nifty and Bank Nifty in the past 2 days, as Harsha just highlighted, I think we've seen a bit of gains in the past few minutes or so. But look at the heavyweights, L&T and HDFC. These two stocks have been supporting the index since the morning session. In the market breadth, now that's very important in the broader markets. Market breadth since morning has been positive on National Stock Exchange. The advance decline ratio has clearly been in favor of the advances. If you could just check the volatility in the morning, it was showing some sort of positive tick, telling you there could be a bit of near-term correction. Volatility last when I checked saw a bit of correction coming by. But importantly, Pharma Index, which was your biggest sectoral gainer yesterday, has seen a bit of cool off. But I also want to highlight Biocon there. That stock has seen a big surge coming about in just last half an hour or 1 hour or so. But from the media space, Harsha, you've got stocks like Hathway. That's locked in upper circuit with 20% gains after posting strong set of earnings. Rub-up effect seen for Den Networks as well. And Punjab National Bank, that's the latest one, which came out with its earnings. Good set of numbers, improvement in asset quality is seen, and that stock has reacted positively post the earnings. From the broader market, just few stocks, Binani Industries, Excel Crop reacting positively to numbers. Rain Industries has surged almost 10%, and a couple of your paper stocks, Star Paper as well as Huhtamaki PPL are up in trade.
So it's not just the the benchmark index; it's the broader markets that are rallying as well. Biocon is one stock that caught my eye at about 7.5% on the back of earnings. Navneet, thank you so much for that. Donald Trump last night stuck to script, said he would nominate Jerome Powell to be the next chair of the U.S. Federal Reserve when Janet Yellen's term ends in February. Powell has backed Yellen's gradual approach to raising rates and is expected to hold that line going ahead. Excuse me. He promised to work towards improving the health of the economy in the long-standing tradition of monetary policy independence. Listen in.
I've had the great privilege of serving under Chairman Bernanke and Chair Yellen, who guided the economy with insight and courage through difficult times while moving monetary policy toward greater transparency and predictability. Each of them embodies the highest ideals of public service, unquestioned integrity, and unflinching commitment to fulfilling our mandate. Inside the Federal Reserve, we understand that monetary policy decisions matter for American families and communities. I strongly share that sense of mission, and I'm committed to making decisions with objectivity, based on the best available evidence, in the long-standing tradition of monetary policy independence.
That's the new chair of the Federal Reserve. He takes over in February. But the Fed was not the only central bank in news last evening. Bank of England hiked rates for the first time in a decade to 0.5% from 0.25%, led by Governor Mark Carney. The Monetary Policy Committee voted 7-2 in favor of a rate hike. This move removes the emergency stimulus introduced after UK voted to exit from the European Union. The pound, however, slumped after the commentary accompanying the rate hike. Most market commentators believe that more rate hikes could be on the way, could be some time away, and this is in line with what has been seen across the major central banks. A slow, extended withdrawal from monetary policy accommodation is what appears to lie ahead. What does this mean for financial markets? What does this mean for currencies and treasuries across the board? Vishnu Varadhan, Head of Economics and Strategy at Mizuho Bank, joins us from our studios in Singapore. Vishnu, thank you so much indeed for joining us. Let me begin this conversation about what you thought of what central banks are doing at this point. You've got a new Fed chair. You've seen the Bank of England hike interest rates. Is this in line with what the market is working with?
Yes, I think broadly the theme is in line with what the markets are working with. I mean, the markets are working with two things. One is continuity in the Fed's policy, even if it's going to be a very gradual move as they wind down their balance sheet in a very glacial pace. So nothing too disturbing. At the same time, I think the markets are also looking at the big convergence theme playing out. That's to say, people like the Bank of England, Bank of Canada, the ECB, closing the gap with the Fed in terms of what was previously policy divergence. What is worth noting here is, I think earlier this year, somewhere in August, September, markets got a little bit ahead of themselves in betting on the convergence theme. So they started selling off the dollar, buying up the euro, sterling, the CAD. Right now, it's a bit of a pause to look at whether these are the right bets. And accordingly, we've seen the CAD decline. And the latest, like you rightly pointed out, the sterling decline, because they don't see the next few hikes coming in this so-called usual cycle fashion. It's going to be ad hoc and when the recovery comes through.
What then is likely to happen to the dollar in the near term, Vishnu? Because you've seen some weakening that the dollar is facing against the yen and the emerging market currencies. Is that trend likely to continue?
I think if you take a broader view of this, we are big believers that the convergence theme will play out into late 2018, early 2019, and so a bit more moderation in the dollar is certainly due. But nothing ever moves in a straight line, and I think because the convergence bets are overbaked, what we will see is a period of dollar volatility. What would really lead to the volatility is because apart from monetary policy, on a parallel track, you've got Trump policies running. So, with tax reforms, you've got disappointments, hopes, so on and so forth. And so we will see a little bit of volatility. But what we are anticipating is in the next 6-month window, we will probably be seeing a bit more dollar strength making a comeback before the dollar moderates again as major central banks get back onto the tightening theme. But not quite yet. I think the dollar weakness theme this year is a little bit overdone.
Okay, hold that thought just for a moment, Vishnu. I just have some news across my screen. Bharat Forge is saying that it's interested in acquiring Amtech Auto. That's an interesting development. Bharat Forge, of course, is that's the stock of Bharat Forge. Bharat Forge, of course, is one of India's well-known auto ancillary maker. Amtech Auto has been in all sorts of financial trouble, and this could be an interesting move particularly for those financial institutions that have been backing Amtech. That's Amtech for you up 20%. Reason for why you're seeing that stock spike significantly. But Bharat Forge, we have no more details in that, but we'll wait and watch how the story unfolds. That's the story of Bharat Forge evincing interest in Amtech Auto. Vishnu, let me just come back to, when you were talking about the dollar. You are the third most accurate rupee forecaster in Bloomberg's quarterly ranking for the third quarter. How are you feeling about what the rupee is doing in the context of what the government has done? And let me split this into two questions. One, in the first half of this year, you saw the rupee swing one direction. In the second half, you saw the rupee swing in another direction, and now you're seeing a bit of choppiness. What's going on in the dollar rupee equation?
Well, to be very honest with you, I need to reorientate myself as well. I think when we moved into the post-demonetization report from the RBI, and we saw a bit of populism creeping in, farm debt waivers, widening of current account deficit. Cyclically, I was beginning to turn less bullish on the rupee, at least in the near term. I was thinking rupee outperformance on a relative basis is going to be tempered. The dollar theme would be the big one. But the bank recapitalization has been a big positive. So we are thinking of how to play the rupee story out. We're still looking at 12 to 18 months rupee going below 64, 63, testing 63 as we look at the big dollar moderation coming in. But near term, we don't want to rule out rupee testing above 66. It does look like a long way from here. But the warning shot really is when the current account and fiscal deficits are set to widen, any up move in the dollar, any dollar surge could take out not just the rupee, but most Asian currencies by a little bit of surprise. So that's the surprise element we are pricing in. As with whether this is accurate or not, I'll be the first to tell you it's entirely luck.
So I hear you loud and clear. But just to sort of push that point a little more, your year-end forecast of 65.80, does that stay? And you're saying in the near term the support could be anywhere between 66, 67. Am I getting that right?
Absolutely, yes. So near term, we are looking at nothing too outlandish, not too much tail risks. But as we are looking at the dollar, depending on exactly how these tax reforms play out and how the convergence trades unwind, we are pricing in a possibility that the dollar rebound could be a little bit stronger than anticipated, catching the rupee a little bit wrong-footed as the current account deficit is wider and it's not in the perfect spot that it used to be, where it had very, very narrow twin deficits and everything going right for it. So getting into the election cycle, I want to temper my rupee optimism. I am a longer-term rupee bull. But for now, I think I'll just sit by the benches and wait and watch.
There's another interesting theme also playing out, Vishnu, that while people have turned bullish on stocks and perhaps on the currency as well, there is a sense of bearishness that's crept into the fixed income market. People believe that there is going to be fresh supply of paper given the bank recap plan. Would you agree?
Well, I think that, the bigger theme that I want to play out is if you think about real rates really bottoming out as inflation rises, I'm bound, I've got a bit of a proclivity to agree with the rates market, saying that look, the yields have to go a little bit higher, so it does look like the overall equation does look less attractive than it used to. But having said that, because there are a lot of limitations on foreign buying ownership, be it with bonds or equities, and the longer-term India story tends to be a very, very compelling bullish story. People who are already in are reluctant to get out. So I'm not so sure that the yield move upwards is going to be brutal because people making their way to the exit may want to consider whether they want to or not, and they rather hang on for the longer term. So I'm acutely aware of the supply-demand dynamics due to the limitations. So it's a bit like buying a branded good. High price doesn't matter; people still get in. So low yields that's not justified by fundamentals may not deter because they see the longer-term value in it, the exclusivity value in it.
Okay, so very quickly, so you're suggesting that the yield of the 10-year paper will perhaps stay at these levels without tapering lower?
Well, I think the yields are going to start rising somewhat. That's going to be a function of the fact that returns are not looking as good and inflation is going to start edging higher. So it would go a little bit higher, but I think in terms of thinking that the bond papers are going to sell off because a lot more supply is coming on, that fear may be a little bit overdone. I think the demand is there, and it's something that would be a bit stickier, particularly for the foreigners who want to hold on to Indian paper.
How would you comment about foreign investor fund flows? Again, there's been an interesting trend in here in India, where on the equity side, you've seen significant amount of FII money for the first half of the year. For the last 3 months, you have seen significant outflows. The month of October alone, we saw about $1 billion that went out, came back on the day when bank recap was announced. On the other hand, you've seen mutual fund money, which is, the domestic money has been pretty strong. On the debt side, there's been the flow has been steady, and most of it has hit the limits as well. Do you anticipate fund flows to remain equally strong for the rest of the financial year? Will bank recap sort of attract more money coming on the debt side?
Hello.
Sorry, Vishnu, if you can hear me, I was asking you, do you expect fund flows to continue stronger for the rest of the year? I think I believe seem to have lost Vishnu. We'll try and repatch that line in just a moment. But that's the point that we were trying to make, that what does this mean for fund flows? We're talking about global central bank action, while the Bank of England, Federal Reserve, ECB, all of them have been unwinding their stimulus over a period of time. What this means for equity market flows, what this means for fund flows in the emerging markets is the key question to answer. We'll try and get back to Vishnu Varadhan in just a bit. But meanwhile, let's shift focus on one asset class that's been doing extremely well, cryptocurrency. Bitcoin has surged past $7,000 for the first time yesterday, breaching another milestone less than 1 month after it tore through that $5,000 mark. The digital currency got a new impetus this week after the CME Group, the world's largest exchange owner, said that it plans to introduce Bitcoin futures by the end of this year. Skeptics said this rally is evidence that the software-created asset is in a bubble. But in an interview to Bloomberg's David Weston, Lloyd Blankfein, Chief Executive Officer at Goldman Sachs, says although he's not comfortable with Bitcoin, he's open to the idea. Listen.
I have a level of discomfort with it, as I have a level of discomfort with anything that's new. But I've learned over the years that there's a lot of things that work out pretty well that I don't love. I remember when they first came out with cell phones, I'm thinking, why would anybody want this thing? It lasts, battery lasts about 10 minutes. It weighs a ton. You have to have it on your back. And there's phone machines every 15 feet. Why would anyone want this? Guess what? I missed that one. And here, I read a lot of history, and I know once upon a time, a coin was worth $5 if it had $5 worth of gold with it. And then a piece of paper was worth $5, but only if it was backed by gold in the treasury, or silver in the silver certificate. And even then, people were suspicious. Now we have paper that's only backed by fiat. The government says, I think that's what it's worth. Maybe in the new world, something gets backed by consensus. Right. Instead of a government fiat, maybe it's a consensual arrangement by people that agree that it's worth something, kind of like what social media does. It's not my natural state of comfort. But if you told me that, if we went into the future and Bitcoins were successful, I would be able to explain how it's a natural evolution from hard money. By the way, why is gold worth anything more than the jewelry value in gold? That's kind of a consensus that people have, because no government says, I'm going to pay you $1,300 an ounce from gold. It is that. Why is it worth that? You can't eat it. Why is it worth that? Because it's been like that for a long time. And so maybe 200 years from now, even someone like me might be comfortable with it. But right now, I tell you, I don't have an investment in it, but I'm not willing to poo-poo it, and that's why I say I'm open to it.
All right, that's Lloyd Blankfein talking about the Bitcoin. Let's get back to our conversation with Vishnu Varadhan on global fund flows. Sorry, I lost you there, Vishnu. I was asking you what you thought about fund flows, and do you believe emerging markets in India will continue to sustain these level of flows?
Well, I think it's a bit like losing me. it would be very temporary and it would make a comeback. So that's pretty much how I look at it, because, you know, given the very flush global liquidity conditions and the fact that, you know, major central banks are not going to revoke that in a hurry, and we're in a low interest rate world, I think the compelling nature of India's growth story, as well as the you know, the relative credit ratings versus the returns that you're getting. Just to give a comparison, I mean, if you're looking at real returns in Indonesia versus India, India is a much more compelling story for me. And the natural limitations on how much foreigners can buy keeps them wanting more. So I'm not so pessimistic about fund outflows, you know, on a more permanent basis. But certainly, we're not ruling out the bouts of shocks that can come through, particularly if the dollar turn catches I think markets a little bit off guard.
Vishnu, we'll leave it there. Thank you so much indeed for joining us. Vishnu Varadhan from Mizuho Bank, giving us a sense of what foreign investors are likely to do, what that means for Indian markets, Indian currency as well. All right, from conversation on markets, let's shift focus to another interesting topic. Minority shareholders are gaining power in India. A report put out by proxy advisor IIAS shows that 66 proposals have been rejected by shareholders over the past 4 years, and leading the charge are institutional investors. So should promoters and company boards be worried? Joining us to discuss some key takeaways of that report is Hetal Dalal, Chief Operating Officer at IIAS. Hetal, thank you so much for joining us. Let me understand this. Shareholder democracy is clearly getting a shot in the arm by the fact that the governance framework has improved significantly in the last couple of years. Tell me, you know, how are these shareholders getting empowered? How are boards responding?
You're indeed right. I think there are several things which have changed for minority shareholders. I think the most primary one is the manner in which shareholders are voting. Earlier, from show of hands, has moved to e-voting, which has actually resulted in the number of in the outcome being counted by number of votes rather than the number of people who can actually attend a meeting. That has dramatically changed the count by itself. I think the other thing which is happening is that institutional ownership in corporate India has increased. It's reached, on an average for a market threshold, it's reached about 30%. And empirical evidence shows that at that level, clearly the engagement levels tend to improve. So the promoters owning roughly about 50%, institutional shareholders owning about 30%. There is little institutional shareholders can do. They can't do the Wall Street walk, and therefore for them there is an imperative to engage. The regulatory framework is also encouraging engagement by shareholders, and that is in the form of voting on shareholder resolutions as well as talking to management on a very consistent and regular basis, addressing issues and concerns beyond performance and more focused on governance and long-term elements of the company. So these are changes which we believe are indeed positive in terms of being able to give minority shareholders a shot in the arm and being able to exercise their voice.
Okay. Hold the thought just a moment, Hetal. This is the numbers flashing across your screen. Standalone net profit for Hindalco has come in at 393 crore compared to an estimate that's significantly higher. About 0.5% up on this stock at this point in time, 10,310 on the standalone net profit. Is there any other number? The estimate was about 495. The number that's come in is about 393 crore. That's standalone net profit alone that's flashing on your screen. We'll try and get you more details on how Hindalco's performed. From the terminal, I am seeing an exceptional loss of about 1 billion rupees, other income of about 1.87 billion, total cost of about 97.8. So second quarter revenue has come in at about 103.1 billion versus an estimate of about 107.2. Overall, second quarter revenue has come in at about 103.1 billion. Net income at 393 crore as opposed to an estimate of about 495. That's Hindalco's numbers for you. It's clearly been a miss across the board. There is an exceptional loss that's been accounted for. So is the case of another income component. That stock is not moved significantly. It is moving marginally at this point in time, about 1%, but that's Hindalco's numbers at 393. We'll deep dive into this and get you some more details. But let's get back to the conversation that I was having with Hetal. Hetal, thank you for waiting by. One question I had, who is really driving this change? Is this Is this about institutions, mutual funds, getting a little more, exercising their rights? Or is this also because the overall framework has changed and individual shareholders are also having their say?
So, of course, the fundamental structure and the framework has changed. It has certainly empowered shareholders to exercise their voice. So, given that, institutional investors are able to therefore use the size of their holdings to command this change. Retail shareholders have become active. We have seen several instances where retail shareholders have also voted against resolutions. But in terms of the voting percentages, it is indeed the institutional shareholders' voting percentages which actually make a big difference. If you look at the companies where the resolutions have been defeated, the median institutional holding in these companies is 28%, vis-a-vis a 22% for BSE 500. So clearly where institutions have a larger holding, their impact seems to be substantially higher.
Okay, can you give me a sense of what you said? 66 changes have been made. That's what your report says. What kind of decisions are these, Hetal? Are these largely board changes? Is this a, is there a broader trend that you're seeing?
Yeah, so 66 resolutions have been defeated, and intuitively one would think that a lot of them were related party transactions, because these are resolution categories where the controlling shareholder, the promoter, is not eligible to vote, and the vote actually gets exercised only by a majority of minority shareholders. But while of the 66, 17 resolutions are belong to the category of related party transactions, everything else really isn't. A dominant portion of the resolutions getting defeated belong to board or director appointments and reappointments. Now, there again, it's a little nuanced, largely because in several of the resolutions relating to board appointments, several of them have been presented by public sector enterprises, which happened, and that those resolutions got defeated at the point in time that the government changed. So the government itself voted against some of these resolutions. But notwithstanding, if you just look at it from a category standpoint, you have 23 resolutions of relating to director appointments, reappointments getting defeated, 7 resolutions on ESOPs getting defeated. And that's interesting, because when we look at the data at a consolidated level, stock options is a category where we find a lot of institutions voting against. And that's largely because they don't like stock options at a discount to market price, or they feel that the cost is excessive, and some of these concerns which actually step in. So that's a category which is also becoming far more critical for boards to watch out.
Hetal, we'll leave it there. Thank you so much, indeed, for joining us. Hetal Dalal joining us from IIAS, talking about how shareholder democracy, the entire ecosystem, is only getting better. 66 resolutions have been defeated by shareholders in the last 4 years. Just a little clarification coming on Hindalco as well. The exceptional loss that Hindalco has clarified has been related to legal cases and orders, which explains the number. Otherwise, operationally, the stock has marginally up. EBITDA is at about 1389 crore as opposed to 1187. That's the fine print on Hindalco's numbers. Let's wait and watch what this means. Meanwhile, PSU banks not only need recapitalization, but also change in management and structures for a complete turnaround. That's the word coming in from Sandeep Bhatia, Managing Director and Head of India Equities at Macquarie. Earlier today, in a chat with us, he says he still prefers private banks. Here's a slice of that conversation.
Well, we have had a view that the PSU banking needs recapitalization. And we also have had a view that it needs a change in management processes and structures. The recapitalization has happened. I would think it was a year to 18 months later than it should have been, but then, okay, it is here and now. The operating mechanics of the entire PSU sector, except the top bank, like State Bank of India, clearly needs to be upgraded. Their own HR processes and the incentives to take the correct decisions have to be in place in the organizations.
Can it really happen without privatizing? And do you think that can ever happen?
I think mistakes happen everywhere. The global financial crisis was done by big, large private sector banks. So I'm not of the view that just the ownership change. It is the cultural change. The culture has to happen from the governance level of the country also. I think we are in that process of that changing too, but it will take much longer for public sector banks than for the established private sector players. So I would go with an ICICI Bank, I would go with the existing private sector banks over the PSBs. They've already run up. Maybe there's still more room to go, but we are more comfortable betting for the established players in the private sector.
Okay, so a sector upgrade maybe, but not necessarily all players would perform.
Yes.
Selected few. Let's talk about your big call. To me, the big call really, moving IT from underweight to overweight. Now, is this a blanket across the sector call? Do you believe the rising tide will take up all the boats? Of course, you have to pick and choose, but do you think all the boats will move up? Or are you very, very selective within large caps and within mid caps?
We have to be selective in IT. It is not the gung-ho days of the pre-2000 TMT side, where the sector just came into being, so to say. This is a more mature sector. This is a sector in which some managements have had issues, internal issues. So I would go with HCL Tech, and I would go with TCS and Infosys in that pecking order. But definitely, I think the time has come to look at IT, because valuations are at a compelling point. The same thing which happened with telecom, that people had given up on it, and it was a large sector but completely fallen out of favor. I think IT is in that zone. It may take 3 to 6 months for it to come back. It may take even longer. We don't know. But valuations are something that we should react to, and that's why we have upgraded.
But if we look at this quarter
from Macquarie talking about what he prefers on the markets, but let's focus on the Hindalco number that's flashing on your screen. Standalone EBITDA is up 20%, but the company has clarified there's an exceptional loss related to legal cases and orders. If you look at it on an operational basis, revenues are up 14% versus an estimate of about 10,700 crore. Net profit is down 10%. Nikki is standing by to tell us what you know, the devil in the details. Nikki.
Hi, Asha. They seem to be pretty much in line with estimates number. Actually, when I look at it, if I look at the revenues at 10,308 crore, it's almost in line with 10,720 crore estimate that we were working with. Also, the net profit, yes, it has been down to 393 crore as compared to 439 in the corresponding quarter. Now, remember, we were working with an estimate of 495 crore, but let's not forget that there is an exceptional loss of 105 odd crore there. If you would just hive that off, if you look at the exceptional loss, you will see the numbers are pretty much in line with estimates. In fact, if you look at the EBITDA growth of 20% at 1,390 crore, that also seems to be pretty much in line with estimates. From what I read in the press release, it says that there was an exceptional item of 461 crore, and the robust aluminium segment has been driven by higher volume, stable operation, and supportive macro factors. It also says that the copper segment has been bolstered by higher byproduct realization and supportive. Similarly, it talks about Novelis record quarterly shipments here, and it says that the deleveraging will continue till date. The prepayment of project debts worth rupees 8,000 crore in FY18 will be coming through. So from the face of it, it looks like a pretty much in line with estimates set of numbers.
Just bring up that stock for you. Just hold the thought, Nikki, for a moment. I just want to bring up the stock and how it's reacted in the last couple of minutes. Right from when the results came out, the stock moved up marginally, and then it's been sliding down. Now it's keeping its head above water. Just a quick point. From what we were talking about earlier in the day on Novelis, has that contribution been online and along expectations, Nikki?
So Novelis has reported good set of numbers. Now, if you look at the margins, they have been at a 5-year high. Also, the EBITDA guidance have been on the upward side of the business. But then if you look just at the standalone side of the business for Hindalco, yes, it seems to be a good set of numbers. We probably need to fetch in more details in terms of the EBITDA for the South American business, because we were expecting a decline coming there or year basis for the company. This is on account of lower forex benefit. So we would like to assess if that's come through, and also we'd like to look at the cost of production for this company, because the trend that has been panning out across the non-ferrous segment is, yes, the LME prices have been higher, but then they have been partially offset by the higher input cost. So we'd like to understand if the cost of production is actually what is weighing on the sentiment or the margins of the company. That's something that we need to keep an eye out on.
Nikki, we leave it there. Thank you so much indeed for that. That's Hindalco's numbers for you. Out of time on this show. Thank you so much for watching us. Countdown is up next.